So here in this question number 1, PV ratio is given, which is 60%, and the marginal cost of the product is given, which is 20 rupees. We are required to find out the selling price of the product. Okay. Now we don't know the selling price. Here I am saying that, sir, let the selling price be X rupees. Okay. Now let's reduce the variable cost from this selling price, right? Variable cost. Is variable cost is given? Yes, sir, which is 20 rupees. Okay. So here I can get the X minus 20 rupees as my contribution. Okay. Yes, sir. From this contribution I have got, and it is clearly given that the PV ratio is 60%. That means that, sir, this is what? This is 60%. So we know that the PV ratio is what? The PV ratio is contribution upon sales, right? Contribution upon sales, and my PV ratio in the question is given, which is 60%, and contribution is how much? X minus 20 rupees. Here my sales is X rupees. We can find out that, this is 0.6x. Here it is X minus 20. Here it will go to right side, and this will be your 0.4x. Here it will be 20. 20 divided by 0.4, which will give us how much? 20 divided by zero point 0.4 will give us 50 rupees. So here we have find out the value of X, which is how much? 50. So that's how we have find out the selling price of the product, which is 50 rupees herein, right? Okay, this is answer number 1. Now let's talk about question number 2. The ratio of variable cost to sales is 70%, right? Okay, sir. That means our variable cost is 70% of the total sales. Okay. The break-even point occurs at 60% of the capacity sales. 60% of the sales will give us the break-even sales, right? That means our fixed cost will be covered up at 60% of sales. Find the capacity sales when fixed costs are 90,000. So this is the first thing, that we are required to find out the sales when fixed cost is given, which is 90,000. Also compute profit at 75% of the capacity sales, and at 75% of the sales we are required to find out the profit. Now let's see how we can do the same. This is second. Now here it is given that, the variable cost to sales is 70%, and the break even is 60% of the sales, right? Find out the capacity sales. So that means ratio of variable cost to sales is 70%. That means our variable cost will be covered up at 70%, and 30% is what? 30% is contribution to sales. If variable cost to sales is 70%, then contribution to sales is 30%. Exactly. That means our PV ratio is 30%. Clear? Right. Now it is given our PV ratio is 30% now. Find the capacity sales when fixed costs are 90,000. Now here it is given that the fixed cost is 90,000. So how much sales will be required to be made to cover up these 90,000 of fixed cost? 90,000, we can find the same by dividing 90,000 by the PV ratio, 30%. That means the 3 lakh amount of sales is required to cover up 90,000 of fixed cost, right? So we have find out what? We have find out first of all PV ratio. So PV ratio will be 100% minus what? So 100% minus variable cost to sales ratio, variable cost to sales ratio, and which is given to us, sir, which is given to us, which was 70%, right? And here we have got 30% as our PV ratio first of all. Now we have find out what? We have find out break even sales. Now break even sales we have find out. How we have find out? So break even sales we have find out 90,000 fixed cost divided by PV ratio, right? So fixed cost divided by PV ratio, right? So fixed cost was 90,000 and PV ratio was 30%. So here we have got how much? 3 lakh rupees. Sir, this 3 lakh is what? This 3 lakh is our break-even sales. Alright, sir. Now find the capacity sales when fixed costs are 90,000. This is our break-even sales. We have not arrived at the sales, which is exactly which has been made in the year, right? This is just break even sales, and it is given that sir the break even point occurs at 60% of the capacity sales. That means sir whatever is the amount of break even sales, that amount is 60% only of the total sales made. That means sir total sales will be how much? Sir, total sales is equal to break even sales. Uh, Sir, break even point occurs at 60% of the capacity sales. Okay, so this is 60%. Now break even sales is 3 lakh rupees. This is my 60%, and now I can get the total sales. So this 3 lakh is just 60%. Here I have got 5 lakh rupees. That means my total sales is 5 lakh rupees. Now let's see. First thing we have find out, also compute profit at 75% of the capacity sales. Now at 75% of the capacity sales, I have to find out the profit. How can I find the same? Now let's see. Now 75%. So total sales is 5 lakhs. Now let's find out the 75% of the same. 75% na? Right. So 75% of the sales is 3,75,000. So now this is second requirement of this question, right? Where we are finding out the profit. Profit at 75% of the sales. So here my sales is how much? 3,75,000, and my variable cost is how much? My variable cost earlier were of rupees 60% or no, total the ratio of variable cost to sales is 70%. That means of this 70% is my variable cost, 2,62,500. 2,62,500 is my variable cost. Here I can get the contribution figure. Contribution is how much? This figure will be reduced from 3,75,000. Now let's see, 1,12,500. 1,12,500. Whether I have done the calculation rightly or not. 3,75,000. Okay. So here I have got 1,12,500. This is our contribution. Now let's reduce the fixed cost. How much is our fixed cost, guys? Look, sir, our fixed cost is how much? Our fixed cost is 90,000. Sir, where it is given, the fixed cost will remain exactly the same because fixed costs are nevertheless changing with respect to the volume of the sales. So that's why our fixed cost is 90,000. That will remain same. Here I have taken the 90,000 as our fixed cost, and I am getting a profit of how much? So 1,12,500 reduce 90,000 will give us 22,500. Just look here. So 22,500. Let me just show you. That's a 90,000. So 1,12,500 minus 90,000 will give us how much? 22,500. This is our profit figure. All right, right, sir. Now in question number third, we are required to determine the profit when sales is given to us, fixed cost is given to us, and break-even point is known to us, which is 1,60,000. So break-even point means the point, the sales where our fixed cost is covered and our variable cost is covered. We are at no profit, no loss situation. Okay, okay, sir. But here the sales are 2 lakh rupees, which is more than 1,60,000. That means, sir, definitely we are going to have some profit in this case. But sir, how much? That amount we have to calculate in this question. Now let's begin. How? So now let's look at the thing, sir. That's when our break-even point, when our break-even sales is 1,60,000, where we don't have any profit. That means our whole contribution will be utilized to cover up our fixed cost, right? Definitely, sir. So that means, sir, we can say that, sir, our contribution in the case of break even sales is how much? Our 40,000, because the fixed cost is 40,000 now, and fixed cost is never changing, right? So that means, sir, what that means, sir, our PV ratio is how much? Let's take, this is our contribution, 1,60,000 is our sales. PV ratio is 25%. Definitely, sir. So this PV ratio will remain same. Okay, when our sales is 2 lakh rupees also. Okay, okay, sir. Right, because sir, everything will increase now. Our sales will increase, variable cost will increase. Accordingly, our contribution will also as in proportion with the sales. So that's why PV ratio will not change. So 25% is our PV ratio. We are required to find out the profit. Now now this is very much simple. Now this is very much simple. Our contribution will be how much? Our contribution will be how much? Now let's see. This is third. This is wrong. Now let's see. That's our. Now let's see. We know our contribution. We know our contribution in this case, right? Contribution is how much? Contribution we know. Sir, 2 lakh is our sales, and of this 2 lakh, 25% is what? Is our contribution. That means, sir, one fourth of this. So one fourth of this. Now let's see. 2 lakh into 25%, that means sir 50,000 is our contribution. Now sir, contribution reduce. Now profit is what? Sir, contribution less fixed cost na. Contribution is 50,000, right? Now fixed cost is how much? It is given that fixed cost is 40,000. So if we reduce 40,000 from this, we will arrive at the profit figure, which is 10,000. Now it is clear. Here we have find out the PV ratio. How we have find out the PV ratio? Sir, we know that sir, this 40,000 divided by this 160 is our PV ratio, which is 25 percentage, right? Alright, sir. So as how we have find out this thing. Now let's see the point number 2 of this third question, same question. Determine sales when fixed cost is 20,000, profit is 10,000 and break-even point is 40,000. Here we are required to calculate the sales. We know the fixed cost, we know the profit figure, and we know the break-even point also. Right? Alright, sir. Now let's see in this question also. Let's find out first of all the PV ratio, right? How can we find out the PV ratio? We know that the break-even point is given to us. That means our whole contribution will be utilized to cover up this fixed cost. So we know the fixed cost, which is 10,000. Oh, I'm sorry, which is 20,000. So PV ratio, so 20,000 divided by how much? Break-even point, which is 40,000. That means 50% is what? 50% is our PV ratio. Now we can look at the thing that sir, whatever is our sales, the 50% of that, that means the contribution. That contribution, from that amount of contribution, we will be covering our fixed cost and our and uh, and the excess amount is our profit, right? Right. We know this thing. That means whatever is our sales, the contribution of on that will be equal to our fixed cost and our profit, right? Now here what is given? Sales is not given to us and we are required to calculate the sales only. Sales is not given to us, but we know the PV ratio, which is 50%, and here we know the fixed cost, which is 20,000, and we know what? And we know the profit figure also, which is 10,000. Now we can see that side this is 0.5 of sales and this is 30,000, right? So this means that the sales will be how much? This is 30,000 divided by 0.5. So 30,000 divide, I'm sorry, 30 uh, 30,000 divided by zero point 0.5. So this will give us how much? 60,000. 60,000 is what? 60,000 is our sales. So here we have completed this one also.